here Rick Mwadit.com with a follow-up of the previous video. Of course, here we're talking about taking a look at stocks that are setting up to go lower, assuming the market goes lower. And it became a trick because when I was going through all this list, and in this list we have about 107 sectors. So that's a lot of sectors to look through. I've checked through all those, and it became apparent to me that all the charts look alike. In other words, you can take a look at the drop this past month, this past week. Pretty much all these charts look alike, and it became a struggle to figure out which of the 107 sectors I would have to concentrate on. And I'm looking for the weaker sectors. So what I decided to do here is do this follow-up video, because what I realized is if you are going by the previous video, you'd still have to narrow it down even further. So here's what I'm gonna say. So let's take a look at a simple way of deciding which way to go. So you have the RSI on the monthly, and let's say, so this is the RSI scale, that's 100 and that's 0. In bear markets, you want to spend most of your energy in sectors that are trading. Let's say this is 50 level, so let's just call it, hold on a second here. So if this is a 50 level, right, on your RSI on the monthly, so let's call that 50 level. Again, this is a monthly chart. Just want to show you a simple way of deciding what to do here. It's a general rule, and I think it would make sense. So in a bull market, you want to spend as much of your time in as high of an RSI setting as you can find. The higher the RSI in a bull market, the more the momentum, the more you want to spend time in winning sectors. So if this was a market where we were looking for bullish ideas, we would be spending our time in sectors that are breaking out, and especially the ones which have the highest RSI setting as much as possible. So fresh breakouts, yes, and if there's a problem between a couple sectors that are breaking out, find the one with the highest RSI setting. That's a general rule. Now that we're in a market that we are more and more looking for stocks that might go down, we are going to be spending a lot of our time finding the stocks whose RSIs are as lower as possible, especially if they are staging a fresh breakout while their RSI is low. So I hope that makes sense. In a bearish environment, we want to find sectors that are already weak, and they are weak for a reason, because the market doesn't favor them. And in an instant where the market is pushing stock sector, they're going to be absolutely destroyed. So as a general rule, what I've decided to do, because it became a task in this current market to find sectors that we might want to concentrate on, and what I've done is I've just went ahead and took a look at those 107 sectors, and I'm spending more time now finding the stocks whose monthly RSI is as close to especially 30.90 as possible. As an example, let me show you as an example here of what I'm talking about. Let's take a look here, and I'm just going to take some stocks that were breaking down, but really not that bad, and I'll show you that in a second. And so I have a list here. I'm just going to paste the ticker symbols that I want to discuss here, and I'm going to click on add more or add many. So click on that right there. All right, so they're going to load up, and I'm going to come here and I'm going to select. I want to watch or view this from a, see here, let's try it another way. All right, I'm going to select the 34 months or 36 months. Well, first and foremost, let me select all. I forgot to do that. And then we're going to come here, and I'm going to select 3-year monthly. Click on change, come here, select 10 per page, and so here we have our chart. So, and you can notice here that this group seems to be more in the biotech space, and take a look at the fact that this has not broken down yet. Close enough, but not yet breaking down. For example, you can see that they haven't broken down. Many of the charts that I was looking at on the sector were already breaking down, if not already broken. So this has not yet to break. So what I'm saying is, here's a sector that I can avoid when trying to find short ideas, which is the biotech space. Even the biotech index itself has yet to break down below 2015 monthly closing lows. So clearly The last thing I want to do is try and short a strong sector relative to the entire market. Also, I have to be very aware, because this instrument is not trading below 50. So because it's not trading below 50, I have to be aware that if it holds the 50 line, it might bounce. So keep that in mind. I'm also avoiding stocks whose RSIs are above 50 when trying to short them, generally because they can find support at the 50 line and move high. So I have lots of videos talking about support at the 50, especially on a monthly chart. For long-term charts, if they find support at the 50 RSI level, they might bounce. So what I'm looking for is stocks that have already broken through and are trading in the 30s, 40s, and below, just because they are weak. So here's an example of a sector that, yes, it might be breaking down. For example, the healthcare providers, and some of them we've been shorting them, but you can see that they haven't really, this is not a material breach. Just now is when they're breaking down to fresh monthly lows. So they are holding up relatively well compared to the rest of the market. So you can see here, still holding up pretty much decent. So here's a sector that I've decided not to highlight for subscribers because they are holding up very well. And I'm going to show you next a list of sectors that I'm going to be spending some more time trying to drill and find ideas. So give me a second here, let me paste that and we'll take a look at how those charts look like. And so let me just go ahead and see, this is also partly an educational video on how to use stock charts for those of you who use that service. I'm going to click here and I want to delete all these charts here. Select all. Then I'm going to come here and click on delete. So get rid of that. And then I already copied the list that I'm looking at. So I'm going to come here, paste that new list that I want to discuss. And then I'm going to obviously come here, click on add many. Let's do that. All right, so this is the group of 18 sectors that I've highlighted that I'm going to be looking more and more into and see whether we can find some ideas. So I'm going to click here, select all. I'm going to come down here and on my options, I'm going to select, let's take a look here. I'm going to go and take a look at the 3-year monthly view. So let me do that correctly. So I'm going to highlight here, change, and then I'm going to go to 3-year monthly, change. So it's going to give me all these are going to be changed. I'm going to come back here, click on edit, and then go to 10 per page. And so this is what we have. Now take a look at these sectors here. You can see that what I'm getting at, this is the ones I'm going to be spending time on. These ones have already broken to fresh monthly lows. That's why they are on my short watch list. So out of a possibility of 107 sectors that I was looking at, so from 107 I've narrowed it down to 18 sectors. And probably after I go through this list again, maybe again two or three times, I might end up with 3 sectors, maybe 4. And then I'm going to go within those 3 or 4 sectors, maybe 5 sectors, and find stocks that look like we might want to short. So that's how I've spent my Sunday morning, and just enjoying my time here, trying to find out what we can use. So you can see here I'm trying to find stocks that are really weak. For example, the aluminum sector has been weak and is weak. You can see here the reason why I want to add this on my watch list. Let me get that right there. So the aluminum sector, and the reason why is pretty much because here we have a possibility that the RSI could punch through 30.9, and I want to be part of that move. Keep in mind that 30.9 is similar to 69.1, and as an example, you can see once it moved above 69.1, excuse me, here you want it to go long. So that's the exact opposite, that if it cracks below 30.9 here, 30.9 crack below that, then you want to go short. Hope that makes sense. So above 69.1 for bull markets, you want to go long. For bear markets below 30.90, you want to go short. And so we are looking at sectors. Now here is one that I might delete because I just noticed here that it is trading above 50. So here's one that I had shortlisted. I'm going to have to remove it from my list because it is here we are seeing that the monthly RSI is trading above 50, hasn't broken down to fresh price lows. So this one is one that I'm going to have to remove from my list of 18. So here's one that I'll remove because it's not breaking down, and I don't want to short strong sectors. I want to short weak sectors. and so on and on and on. Here's one that is the banking index cracking below 50 right now. So that's why it's of interest. It's cracked below 50, so it's weak. And here's one that has been weak over the last couple of years, which is the coal index. But I still want to take a look at the ideas in this sector. So bear with me here. Let me do this a different way, because this is becoming a little bit. All right, let's do this right. So here we go. And so you can see, take a look at the coal index here. Has been, ever since it moved below 30.90, which is what I'm stating here, that you really want to take a look at stocks that are breaking down, because once it moved below 30.90 middle of 2015, it's moved from $70 as an index all the way to as low as the mid-teens. Why? Because the RSI is below 30.90. So it makes sense in this current market for us to take a look at stocks that might be cracking to fresh moves below 30.9. And so anyway, so this is the list of stocks that I'm going to be looking at here in the next couple of hours as I find ideas for subscribers. And here's a continuation of the same group. Now, one more thing let me point out here is what I've also done is I have also spent some time in trying to find which sectors performed the worst. For example, this is, I think it's a critical thing as a distinction. So here's a sector that is breaking down. It is the home builders. It's breaking down. It broke down below 50. So the time to have short this was somewhere here as it cracked to fresh monthly closing lows below the monthly closing low here. So once it moved below about $37, it was a sell, which was here. That also corresponded nicely with our MACDs moving to fresh 3-year lows at that point, and also fresh 3-year lows here. So that was also corresponding with RSI and MACDs breaking to 3-year lows. That's why it is still on my watch list. Just because it broke down this month and towards the end of last month doesn't mean that they are not stocks within the sector that are timely shorts. So this one is on my list. But what I was trying to add on here and explain a little bit further is what I've done in trying to find the best sectors to short. I have also taken time to take a look at how they performed in 2008, which is the most recent bear market. What I'm looking for is sectors that really tanked in the 2008-2009 period. So I'm looking for stocks, for ETFs and sectors that had really had a tremendous down move in 2008, because I think that shows that in a bear market they tend to really, or can really, especially if the conditions are right, drop substantially. So here's one that did drop substantially, so I'm going to keep it on my watch list for things to look for in case we are going into a bear market. And I've gone through all this list. So these are different sectors. This is industrial machinery. You can see here a big move from about $250 all the way to $100 in 2008. So that's a candidate for a sector that can crack. Here's another candidate that cracked a Dow Jones Hotel Index. Big move from 700 all the way to under 200 in 2008. That's exactly what I'm looking for, sectors that can really drop in a bearish environment. Here's another sector, which is a US Electronics Office Equipment Index. Huge drop in 2008, 2007. So maybe right now they're breaking down. And then also you can see here, so from my list of 18 sectors, I'm going to continue narrowing down further and further. I want to end up with about 3, maybe 4 sectors, somewhere around there, maybe 5 sectors. But I want to make sure that they dropped in 2008 as a requirement to further reduce this list of 18 to a few sectors. So here I see one that dropped from 1250, or this is US investment services, from 1300 all the way to under 250. That's a big drop in about 2 years. So that is a sector of interest. I'll keep that on my watch list. Here's one that didn't drop substantially in 2008. It moved from 375 to about 200. Percentage wise, that wasn't a very big drop. So I'm going to remove this from my watch list. And so that's how I do it. So these are some of the things you can consider. Of course, at the end of the day, in a bear market, most of the stocks are going to be moving low if it's a bear market. But what you want to do is find sectors that are going to move even much lower than the general market, which is what this exercise and these last two videos are about. Eric Muadid, Muadid.com. Good luck, peace, and blessings. S.